Warren Buffett has been holding this lesser-known insurance company, Globe Life, for more than a decade. Let's check out the reasons for this and why you can consider investing in this company for long-term holding as well, especially since there's been some pullbacks and correction of its share price in the recent months on the fear of a potentially higher interest rates environment that could temper the economy. Globe Life is the holding company for a group of insurance companies that primarily market life and supplemental health insurance to lower middle to middle income households throughout the United States. The company segregates its operations into two main segments, life insurance and health insurance, with the life segment making up more than 71% of fiscal year 2020's underwriting margin and the health segment making up the remaining 28%. Globe Life markets its insurance products through a few exclusive agencies, directly to consumers, as well as through independent agencies for its Medicare supplement business. Apart from its insurance operations, the company generates substantial investment income from its float. Just for understanding, insurance premiums are usually paid upfront, hence it provides insurance companies with a source of investable cash known as float. With this float, Globe Life has been able to invest in long-term fixed-rate investment-grade bonds which generate substantial investment income for the company in return. Moreover, a rising interest rate environment will be a positive ingredient to boost its investment income moving forward. So why has Buffett been holding Globe Life for so long? Well, the first reason will be that it is a strong business with consistent earnings. Due to the competitive nature of the industry, a substantial number of insurance companies usually make a loss on their underwriting, just so they can get a slice of the valuable float. However, Globe Life's insurance business can almost cover all the expenses of the company's operations, and this leaves most part of its investment income as profit to the shareholders. So due to the strong business it has, the company's earnings have been increasing steadily over the past decade. Globe Life's operations were adversely impacted by the recession caused by the COVID-19 outbreak in 2020, as well as due to the increased death related to the pandemic. However, the company's business model proved to be resilient, posting an almost flat earnings per share in the fiscal year 2020 compared to the previous year. As a matter of fact, based on the latest second quarter 2021's earnings results, Globe Life is expected to continue growing its earnings this year. Fiscal year 2021's earnings per share is expected to grow by 8% to $7.44, which is the midpoint of the guidance from last year's $6.88 per share. This brings us to the next point of why Buffett is still holding Globe Life after so long, and that will be the fact that the company has been repurchasing its shares every year for quite some time. Observe from the chart here, the number of shares outstanding has been reduced by more than one-third over the past decade. And management is intending to continue repurchasing shares from the market as they deem the current stock price as exceptionally attractive, with a price-to-earnings ratio of about 12.5. This will be a more tax-efficient way to return profits to shareholders compared to distributing in dividends, though the company does distribute a nominal dividend yield at less than 1% based on the current share price. Another reason why Buffett is invested in the company will be the strong and consistent return on equity. The strong underwriting business and investment income have produced consistently high return on equity of about 12% over the years, albeit dropping slightly over the last year. This is one of the key metrics that I believe that Buffett uses in assessing the profitability and quality of a business. All in all, Globe Life has produced fantastic returns for its shareholders. And finally, we can see that Globe Life has a pretty healthy and strong balance sheet. As of the end of the second quarter of 2021, the company holds about $2.25 billion of debt, and this is about 3 times the fiscal year 2020 earnings. Also, 2020 earnings is about 8.4 times the interest expense of the same fiscal year. Therefore, overall, I would say that Globe Life has a very healthy balance sheet. However, while the company's business remains strong and is expected to continue to generate consistent earnings and positive cash flow, there remains some risk that investors need to keep in mind. First will be the impact of the COVID-19 pandemic. If the situation exacerbates from here, then it will definitely affect the company negatively. But I think with vaccination in progress, we should be in a better position to handle the virus moving forward. Secondly, any increase in tax rates will translate to less capital for Globe Life to invest, and this will reduce the amount of capital that can compound in the future. Finally, I would say that the company does not enjoy a solid, strong moat per se, though it definitely has competitive advantages in serving the lower middle and middle income groups in the United States. What's worrying will be the circular trend of people switching to insurtech platforms online to compare insurance policies and pricing across multiple insurance carriers. Thus, it will get increasingly competitive in the market. Profit margins may be affected, but we do see Globe Life's effort in distributing its insurance products through the internet as part of its direct-to-consumer channel. As observed from here, you can see that the direct-to-consumer channel premium has been growing steadily over the years as well. To sum up, Globe Life is a strong business with consistent earnings and positive cash flows. It exhibits traits of a winner as a long-term investment, a typical great business that Warren Buffett would want to hold. With slow but steady growth, coupled with consistent share repurchases, we can expect the company to continue to outperform the market like what it has done in the past. The current valuation PE ratio at 12.5 is close to the average PE of around 10 to 15. Hence, I think the recent pullbacks provide a good entry to invest in Globe Life at a reasonable price, especially for those looking for stable long-term returns. Let me know your thoughts on this and share with us in the comment below, and consider subscribing to the channel if you find what I share with you today is useful. In the meantime, check out the recommended videos here to continue learning so that you can make better decisions. Keep learning, and I'll see you next time.